Welcome to the channel. Don't forget to like and subscribe. Today we're going to talk about, have you ever heard about digital banks? A digital bank is a bank that provides and runs banking services via online or other electronic channels. In addition, according to business.com, digital banks are an end-to-end platform. The meaning of end-to-end itself, when bank services include the front end that customers see, the back end that can be seen by bankers through the server and the admin control panel, and finally there is middleware that connects the two. Usually, an agency can be called a digital bank when its banking services are attached to its parent bank, which is a conventional bank. So, not all banks that run online or digital banking are called digital banks. Banks that do not have a parent bank and only had a digital ecosystem from the start are called neobanks. Requirements to become a digital bank. As discussed in the previous point, setting up a digital bank does not have to start over from scratch. A conventional bank company that has previously been established can transform into a digital bank. Then the requirements for a bank to be called a digital bank are as follows. First one has a secure and innovative technology-based banking service and business model. Second, able to run a wise and sustainable digital-based business model. Third, able to form risk management to deal with problems that may occur in the future. Fourth, can meet the standards set by Financial Services Authority. Fifth, willing to contribute to the advancement of the digital financial ecosystem. Digital bank benefits. Digital banks usually have features that make it easier for users to access all financial needs, such as viewing savings, applying for loans, to investing for the future. General things such as opening an account, making deposits, transferring money, and so on can be done online without the need to visit a branch office of a particular bank. Now the question is that the only benefit of digital banking? Of course not. Here are the benefits of digital banking. First one, can be done anytime, anywhere, and anywhere. With a digital bank, you can perform all financial services online, so you don't have to go to the branch office of a bank. Therefore, you will save more time because there is no need to queue at teller or customer service. All services usually can be done through a mobile phone application flexibly wherever you are, as long as you are connected to the internet. Lesser admin fees. The business model of digital banks is to offer customers the ability to perform all banking services online. Therefore, this can certainly cut a lot of operational costs, which are quite large for banking industry. Therefore, because operational costs are also reduced a lot, digital banks usually have cheaper admin fees. There's even some that offer free monthly admin fees and for transfers. Third, have bigger interest. If you take the time to research digital banks, you will find that the interest they offer tends to be higher than conventional banks. Meanwhile, the interest offered is for savings products or deposit products. On average, digital banks are able to offer interest above 4%, while conventional banks are usually below 3%. Fourth, service available 24 hours. By going online, of course, you will not be tied to bank working hours to get access to financial services. Whatever banking needs you want, it can be accessed 24 hours to the mobile application. Fifth, there are special rewards or promos. Because this business model is relatively new, digital banks often provide certain rewards or promos for every transaction made, starting from discount promos, cashback to points, which if collected can be exchanged for discount. So that is the explanation about digital banks. So digital banks usually offer not only savings products but also investment products such as time deposits. So what do you think?